Weekly Market Review. I'm your host, Robin Murray, here today with Senior Portfolio Manager, JJ Schenkelberg. Hey, JJ.
Hi, Robin.
Okay, I want to start out by talking about inverse S&P 500 positions. Why are investors seeing those in their portfolios when they're generating negative returns?
That's a great question, and it's one that's on a lot of our investors' minds. The inverse position has the ticker SH, and many individuals have seen that with a negative return on their portfolio, on their statements. The SH position is there as part of our tactical fixed income position, actually, part of that theme. And what it's there for is to hedge against interest rate risk. We use it paired with a long equity position to offset the risk of bonds falling when interest rates rise, which we've seen most recently. We've seen 10-year Treasury yields rise over 20% in the last several months. Bond prices have fallen. We've seen the Barclays Agg go down over 2.5%. And the paired equity position has actually outperformed that position by over 2% during this time period.
Okay, and let's talk about Fed funds. What's impacting a potential rate hike these days?
Everything. Everything is impacting the expectations for a Fed funds rate hike. Right now, last week we had everything from non-farm payrolls impacting it here in the U.S. to talks in Europe regarding the Greece debt situation. So worldwide, any news events seem to impact the expectations for when the U.S. will raise rates.
Okay, and finally, we're seeing a lot of people retiring lately, obviously the baby boomers. What should people that are retiring now be considering when they're kind of moving into that income phase of investing?
That is such an important question right now. We see so many investors moving into that income phase and thinking they need to generate that systematic withdrawal that they require through dividends and income. Really, dividends and income are a great way to generate that income. However, a more total return approach may be appropriate for many investors. First and foremost, they need to get their risk level correct. So getting the right risk budget is the most important thing for these investors. And then we can look at the strategy that best fits those clients, which may not be just looking at dividends and income.
All right, well, thanks for your time today, JJ. And that's it for this week's review. Thank you for your time and trust in CLS Investments.